Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here since 2003, 20 years for individual traders and professional institutions. Okay, let's go ahead and get started. This is our back-end newsletter recorder, so let's go ahead and start this newsletter. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Thursday, April 6th newsletter. Normally, Steve does the newsletters on Thursday, as you know, but given the 3-day weekend, I think he decided to take off, which is fine. But given the fact that, remember, this is the last newsletter this week. Remember, Steve and I are both going to be out of town this coming weekend, so there's going to be no newsletter on Sunday. It's got to be 10 years or more since that's happened. So you guys should be fine. So this is the last newsletter this week. Again, Steve and I wish everyone a very nice 3-day holiday Easter weekend. We appreciate everyone here, all your support. Feels like family with the Breakpoint Trades. And again, appreciate all you guys. And we hope you have a nice weekend. That said, despite the 3-day weekend, again, the U.S. markets are closed on Friday for the Easter holiday. The jobs report is still going to be issued on Friday. Remember, the jobs report comes out the first Friday of every month. So that's still come out on Friday at 8:30 Eastern Standard Time. That's likely to cause gyrations for futures. We won't know the effect on the cash market until Monday. That said, futures, if you do follow the futures market, they will be trading but only until 9:15 a.m. on Friday. It's kind of odd to me. Normally on holidays they trade till I think 11:30 or 12. So that's kind of odd, but they stopped trading then. So if you're following futures, you could see the effect on the jobs report has on that, and of course Sunday evening when futures reopen. But it's going to be interesting to see how what that jobs report is. We've started to see economic data weaken. It's been weakening, and we saw a little bit of that today with the initial jobless claim. So we'll see how that looks tomorrow. All right. This newsletter is going to be pretty brief otherwise, guys. And let's go ahead and get started. So item number 2 shows the index sector table, what transpired today and this week. You can see today the major indexes were up, albeit slightly, anywhere from about 0.35 to 0.75%, with the NASDAQ leading. For the week, most of the indexes are down, especially the Russell, down 2.5%. That's strongly affected by the financials and banks, which still continue to lag and underperform. But the Dow is up, not surprising. Market sectors, more sectors were up today than down. There's 21 sectors here, but not many more. It's kind of a broad mix of up and down. No big moves here, really. Biggest moves were about 1.5%. Energy was weak today. It's otherwise had a decent week. Currencies, US dollar up just a tad, still down 0.5% for the week. Cryptocurrencies all down. Commodities were mixed. Crude oil just up slightly. Natural gas cannot get a bounce to save its life. It was up a little bit yesterday, but smacked down again today, down 9.25% for the week. Copper up. Agriculture up. Corn, wheat down. Precious metals, gold and silver were down. They're up for the week. But the stocks still were up. GDX, the miners. Remember, the stocks lead. They have outperformed. And this area has clearly had the wind at its back. So congrats if you've been in that area. It's been fantastic. Not surprising given the backdrop of everything going on with the economy, with the dollar, everything else. As far as bonds and rates, TLT was up. So the 10-year Treasury yield continues to work lower. Next, item number 3 shows the economic news calendar. Again, Friday we have the jobs report, guys. Remember that. And earnings season is going to be starting later this month. It's going to start with the banks, and that's going to be interesting to see what effect that has on the market finally. Next, item number 4, these tables show you the open mechanical system trades. So the top tables up here, as you know, represent the 21 reversion amine systems and the breakout system. So there's 22 systems here. we run all these individual systems on SPY and ES futures. We send out trade notifications for those whenever they do a trade. And most of the time, these reversion to mean systems stay in cash. But anyway, you can see we have 3 open trades there. We have the breakout triggered a first entry long on SPY and on ES futures on the 31st. And yesterday, the DBDS system triggered a first entry short on SPY. Okay. Now, so effectively, the SPY systems are hedged. One's first entry long, first entry short. So they're hedged until one of those closes out. Now, the trend following 401k KISS systems, most of these are long. They've been long for a while, such as the Q's, been long since March 15th. They have these trailing stops. We call them smart trailing stops. So there you go. Next. Moving on to the index chart. So chart number 5, here's the daily view of the indexes. Again, you can see, we bottomed back there in mid-March. Last week, we took out these downtrend lines on the indexes. The NASDAQ took it out a few weeks back. That's been leading. The last couple of days, we've pulled back, consolidated, basically bouncing off the 9 EMA today on the S&P. So we'll see if this is a flag and we're going to move up next week. Again, we'll see how the jobs report looks tomorrow. Again, the next newsletter from us won't be until Monday. Next. Chart number 6, here's moving on to the S&P charts, our proxy. So here's the daily view of the S&P. Again, no changes, guys, obviously. We broke out of this smaller coil within the larger coil last week, moved up, pulled back a little bit, held the 9 EMA so far. Could we be potentially flagging? We'll see. We'll see which way decide to go to market reacts next week. Again, RSI, you could see the 5 RSI at the top got quite overbought, so not surprising we pulled back over a couple days. Otherwise, guys, the market this week has done usually what it does historically. So historically, the market is up for, or at least for Easter week, usually the strategy is to go long on Wednesday, sell Thursday's close, and that would have worked out. Next. Chart number 7, here's the zoomed in daily view. Again, early this week, we tagged that steep uptrend channel, pulled right back off of it, bounced today. Again, we're still over the 9 EMA, so we're uptrending. And the trend line on the RSI, that's still holding. Remember, these trend line breaks on the RSI 14 give excellent buy and sell signals. So far, we're still holding that. Next. Chart number 8, here's the daily view, zoomed out view. First off, you can see the RSI trend lines. Again, excellent buy and sell signals on all these. Still have some room there to allow for a pullback if we need it without breaking that. Should we get further upside probing over the next week or two, my target areas would be first filling that gap at 42, roughly 42.30, and then maybe even the 4,300 area. I do believe up in there would be a great short opportunity. I know some folks I follow who I respect have some timing windows right in here, and some of them are short. Whether that's will end up playing out or we get further upside probing remains to be seen. I've been leading to the upside here, so we'll see if we get that next week. Next. Chart number 9, here's the daily KISS trend system. Again, no changes here. It went long, a week ago. We pulled back. The smart trailing stop's still pretty wide on this thing, to be expected, until it can tighten up a little bit. You can see Monday and Tuesday, we had a couple A's on there. That's the amateur buying, chasing the highs. And we did get a little pullback from that. Next. Chart number 10, here's the half-day chart I showed on Monday. Again, on the weekend, we showed this little kind of inverse head and shoulder look. Broke out of that neckline. We got up near the upper channel line, pulled back. So far, we've held that little trend line support where we marked. And if this was a fourth wave, I would expect a bounce off of here. So far, we get in it. Again, we'll see what it looks like next week. Next. Chart number 11, here's the 2-hour view I discussed on Monday. So again, talked about this We didn't have any MACD divergence up there at that high, so we kind of marked that as a wave 3 of some sort. Pulled back, we're favoring a wave 4, and we'll see if that ended up being a wave 4 or not. Okay, if so, then we should go up next week and make another high, is at least in a wave 5. Next, chart 12, here's a 60-minute view. Again, we tagged the upper channel line on Monday, pulled back. We're still in the middle of the channel at the moment. Moving average ribbon still bullishly stacked. Next, chart 13, here's SPY 60-minute. Same look essentially. Next, chart 14, here's SPX 15-minute chart. So kind of almost has a little inverse head and shoulder look to it here, quite honestly. But again, this is a 15-minute chart. We'll see what happens next week. Now, should we get downside probing, let's say the market sells off on Friday, there's a couple obvious open gaps that were never filled back here. You could see them from the morning of March 31st and March 30th. Those would be magnets. These gaps, open gaps on the cash index, like to be filled. Of course, there's one way down here on March 29th, but that would be some targets to the downside if we start selling off hard on Monday. All right. Next. Chart 15, here's a 2-hour view of SPY. Again, same look as the index. Next. Chart 16, here's the 4 time frames we like to follow with our custom indicators. The daily is the upper left. The upper right is the half-day chart. Again, we had the A and the 9 there. It pulled back a little bit. We're still above the ATR there. That's a support. All right. Moving average ribbon got pretty wide there. I discussed that the other day. We'll see if we can hold that ATR. We're still above the ATR on the 130-minute and on the 78-minute. Next, chart 17. Here's triple Q's daily. We did undercut the 9 EMA the last couple days, but regained it strongly today. So some money rotated back into tech. Still looks fine. Next, chart 18. Here's the daily KISS trend system for the triple Qs. Again, you can see we had that A the other day, and we did pull back for a day or so, but regained today. No changes otherwise. The smart trailing stop, we've had 3 of them. Systems went long back here on the 15th. When these moving average ribbons were pinching, that was a good entry, and it's been able to raise its stop 3 times now. Next, chart 19, here's the 4 time frames. Again, you can see the daily at the upper left. The half day, we're still holding that ATR. We're holding the ATR on the 130-minute. And you can see that cycle resistance did provide an area for a consolidation. On the 78-minute, we're below the ATR, but we have a little buy cycle. Next, chart 20, here's IWM, small caps. They did pull back off that doji near the 200-day moving average I talked about on Monday. But so that was a good area to sell. Now it remains to be seen if we can form a higher low in here or not. Next, chart 21, here's the 2-hour view. I added fibs. I talked about this last night. We're still holding that 61 fib. For the bulls, I really want to see that area held. So that does it on the indexes, guys. Now let's move on, look at a couple indicators. Chart 22, here's the VIX. Continues down today. Now I will say there is a little RSI divergence here. I don't have it marked, but you can clearly see it. We had a DeMark 9 the other day, a little bounce. We're coming down again. So the VIX may soon be near an area to pull back, guys. Just be aware. Next, chart 23. Here's the VIX 60-minute. Had this little wedge, which we broke out of, not very far, pulled back. But notice, extended the trend line. You also have the horizontal trend line. This is potential support for the VIX to rally off of. If it does, then the market would pull back. Keep an eye on that come Monday. Next, chart 24. Here's the S&P versus the inverse XLP SPX ratio. The two tend to move together. I commented on this that I really want to see this ratio start confirming the move in the SPX here. So far, it is not. Next, chart 25. Here's an example of the breadth, guys, in the market. And it's a perfect example of just, a few handful of stocks, especially in the NASDAQ 100 that are leading. Okay. Well, most of the other stocks lag. So the NASI here, this is the NASDAQ Summation Index with the 2 and 5 EMAs. And you can see here's the triple Qs. You can see how overall these signals correspond very well with market highs and lows. Okay. See that? Even the recent market high there in February. But look at what happened this time. The Qs bottomed here in early March and then rallied, took out the February high, and the NASI did not respond until late last week. So huge lag there. And again, what that shows you is you just have a few large stocks in the NASDAQ that pushed it higher, not the majority of the individual names. Okay. So you do have a big divergence there forming now. Next. Moving on to some sectors, chart 26, here's the XLK. Again, tech was back up today. But again, this is a perfect example. XLK, that ETF, look at this. 3 stocks make up 52% of the damn thing. So I hate even showing this ETF because it's essentially 3 stocks control most of it. Next. Chart 27, XL Financials bounced today. Again, I'm still thinking we got a higher low here just because we did have potential 5 waves to the downside here with the RSI positive divergence. Whenever you have 5 waves, you usually have a pretty good counter trend rally, and that's what we're getting. Next. Chart 28. Here's the bank index. Again, you all know what happened in the banks, but the bank index, you have a pretty nice coil here. Is this a 4th wave coil, or is it going to form a higher low and going to break out to the upside? We'll see. Likely to get our answer next week. Next. Chart 29. Lately, these defensive sectors have gotten a lot of money into them. Utilities have had a really good run here recently off that lower trend line support. Next. Chart 30, XLV Healthcare, also big move lately, especially after breaking the downtrend line here. Next. Chart 31, XLP, Consumer Staples, another defensive area, and a nice rally there after breaking out of the downtrend channel. Next. Moving on to commodities, chart 32, DBC up 1.6% for the week. Again, guys, commodities I view in a bull market. This was clearly the start of a bull market there in 2020. To me, this was the high in July of last year. This correction's been a correction in the bull market. You can see this potential weekly wedge. Next. Chart 33, crude oil. Again, perfect rally right off that 200-week moving average. Bounced off there 3 weeks ago. Now you can watch this RSI 50 area. Next. Chart 34, here's the OVX volatility index for crude oil. Again, this was one heck of a buy signal down here when this was outside its upper Bollinger Bands. It closed back inside. That's your buy signal. Beautiful signal here. Played out fantastic, as did that last sell signal back here. Okay. Not close to any signal at the moment. You can see it's still well over its lower Bollinger Bands, etc. But great signal. Next. Chart 35, ExxonMobil. I meant to remove this chart, but this has been a strong stock, obviously. Next. Chart 39, copper. Down this week so far, down 2% within this channel. Next. Chart 37, DBA, agriculture, up over 1% this week. Now monitoring this resistance trend line here. Next. Chart 38, TLT, 20-year bonds. I drew this wedge on the weekend, and so far prices rallied out of here. This is a measured move, so if it breaks out of this resistance, could we go to 113? Remember, as this goes up, long-term rates drop. Next, Trevor 39 US dollar ETF up today, but for now, finding a little resistance at this channel. This is the area to watch next week. Next, Trevor 40 gold. Gold has had a heck of a run here. Broke out yesterday, the other day, little pullback here. The ratio is still holding up here, GDX GLD ratio. There is a little RSI divergence to be aware of, though. It's had a heck of a run. It could be due for some consolidation soon. It's back in the 2000s now. Next, Trevor 41 GLD ETF continues higher as well. Did stall at this gap area, logical area for it to pull back from. You could see the little divergence on the RSI. Next, Trevor 42 GLD 60-minute view. You get this coil I showed early in the week played out for an upside break. Next, Trevor 43 GDX, the gold miners ETF. Again, we had a buy signal here on March 13th. By the way, the KISS system went long here as well on this same date, but it also occurred on this RSI trendline break. Again, draw these trend lines on the RSIs when you can, guys. RSI trendline break here, as well as the ratio. Excellent signal. And again, my very simple guide is trail your stops up, especially when you're in a momentum uptrend. You could just put a stop a little below the 9 EMA to stay in. This previous resistance, the January highs, is now potentially support. We are a bit overbought here. The RSI 14 is above 70, hasn't been above there for quite a while. Next, Trevor 44, here's the 2-hour review of GDX. Again, no changes here. We continue to hold this uptrend. One thing to watch is this uptrend line on the GDX GLD ratio. If that starts to curl or break, that would be a warning. Next, Trevor 45, here's the BPGDM, Bullish Percent Gold Miners Index. Remember, the bullish percent charts can go from 0 to 100%. Rarely do they get to those extremes, but overbought's typically 75, 80% or more. And this is only at 62%, so it has come up nicely. This little system, it triggers whenever it goes above the 8-day moving average. So that occurred basically in early March. That was a good signal. But it still has a ways to go to get overbought. So that's a positive for the sector, that it may have a lot more room over time to go up. Next, following up on some individual names, Trevor 46 DRD. This was a long idea of mine in the gold area a few weeks ago. It's played out fantastically. Just trail those stops up below the 9 EMA. Next, Trevor 47 BTG. One of my recent long ideas from early in the week. On Monday, I said it had a nice bull flag. Played out beautifully. Next, Trevor 48 RGLD. Another one that broke out on Tuesday there. Great move. Next, Trevor 49 KGC. Another one that broke out. This area is now support. Next, Trevor 50 FSM. Fortuna Silver Mines. Here's one that hasn't moved much yet, so one to monitor if the sector continues higher. Next, looking at other stocks, Trevor 51 Apple, Crapple, still holds up here, bounced off the 9 EMA today. Next, Trevor 52 Google, nice pop today. Again, the big techs are holding up here well, as we know. Next, Trevor 53 Roblox. Remember, I talked about this the other day. I said it pulled back a little bit below that trend line, but was no reason to sell it. I said, swing stop could be still just below that uptrend line there. And at this point, I'd probably move it up to today's lows. We'll see if this can try again higher next week. Have a stop in place regardless. Next, Trevor 54 SPNT. This long idea played out nicely, still holding up. Next, Chart 55, LMT, Lockheed Martin, had a beautiful tight flat coil, played out beautifully. Very strong stock. Next, chart 56, AQN, another one, broke out. Long idea of ours from a week and a half ago, broke over that base. It's been a nice trade. Next, chart 57, APLS was a long idea early last week over this trend line. If you held it, you had a nice trade this week with that big gap. Next, chart 58, First Solar was a short I put out on Monday. It did give a trade yesterday, a little bounce back today. Next, chart 59, AI. As you know, these AI stocks were on fire. They got slammed. There was a report out from one of these short institutions. Not going to go into the details, but it had one hell of a sell-off the last couple days, but got quite oversold here near a support and bounced back a little bit. Next, chart 60, BABA. I commented last night that I liked it, that it looked like a bull flag forming with that light volume pullback, and that played out with a nice bounce today. Next, chart 61, CLX, Clorox as a coil, one to monitor this coming week. Next, chart 62, FRC, First Republic Bank of San Francisco. Got absolutely hammered with the bank crisis, was almost $150 there in February, all the way down to $14 recently. Steve and I did buy a little position in this yesterday. You can see it's up today. Again, we can't say for sure, but someone we follow who's way into this stuff tends to say that under his analysis, he doesn't see this bank going under. And if that's the case, then it could be poised to have a decent rally. So we took a little shot at it. Next, chart 63, NVIDIA. Here's one to watch coming in for the week. He got a little resistance here. Steve took an aggressive little short here. But again, we'll find out what it does come Monday. All right, guys. Again, enjoy your Friday off. Have a wonderful Easter weekend. Take care and see you next Monday.